Okay, guys, this morning we have CPI inflation coming out at 8:30 Eastern Standard Time. It's the first economic data we've really gotten in over 3 weeks. It's been 24 days, government shutdown, and yeah, we haven't been getting jobless claims, we haven't been getting CPI inflation, we haven't been getting the labor report that we normally get once per month, we haven't been getting PCE inflation, we haven't been getting GDP. We haven't been getting any government economic data. This is the first one in 3.5 weeks. We do have some foreign policy news coming out this morning. We got a couple things. The president tweeted this morning. He said, quote, Ford and GM up big on tariffs placed on big mid-sized trucks coming from other countries. Thank you, President. End quote. We also had earnings from Procter and Gamble. They posted 199 versus 191 expected. I didn't see what their revenue was. GD General Dynamics posted 388 versus 371 expected. Revenue of 12.9 versus 12.54 expected. We also had the PBOC says China is to build scientific and prudent monetary policy system balancing short-term and long-term needs will deepen yuan exchange rate formation mechanism reform and maintain basic stability. We also had the China industry minister proposes to ban new steel production capacity in key areas. So more foreign stuff going on. Yeah, we got inflation data today. That's honestly a big day. I'm excited for it. What's up, Ava, Fernando, Kim, Lost, Ash, Alyssa, Ray, Kudos, Pryor, Bernard, Texan, Nick, Sam, 15, E, Trey, John. What's up, guys? What will inflation data come in at? Well, year-over-year inflation. We'll do a couple polls on this today. All right, so will year-over-year headline inflation show up? Well, I'll just ask, will year-over-year headline CPI, make it specific, show up higher or lower than 3.1% expected? We're going to do higher, lower, and then give an as expected option. There you go. That poll is now live. I'll also put a timer up for the data here. We got about an hour. All right, here is the timer. I don't think I've had a timer in a while now. Let me make sure. What's up, Kato? Do me a favor, hit the like button, hit the subscribe button. We appreciate it. Yeah, we finally get inflation data, man. I'm excited. Yeah, gold all the way down to 4,071 today. Gold's been making some swings. But it dipped down. Yesterday it was at like the 100s. Yeah, it was at like 150s yesterday. It's down to 72, 73, 75, almost down to 50. So correct, Jonathan. Jonathan says, wait, so higher CPI is bad and lower CPI is good. That's correct. Generally. Now, too low of CPI can be bad as well. And look at yields. Yields are now over 4% this morning. So yields have pushed over 4%. They're up a little bit on the day, slightly elevated. They were at 3.99 yesterday or somewhere around there. They are now up to over 4%. You take a look at the Fed Watch tool to see the odds for rate cuts next week. Now, this is big because next week we have the FOMC decision. This is the first real economic data we've had since then. It's still 97.3 basically. Likely that we're going to cut rates next week. This is 25 basis points. This is 0. So that's what the odds look as of now. Look at the NASDAQ fall down here. Look at this drop. We did have some earnings this morning. We did have some. Philip Morris. Yeah, spot gold's down nearly 2%. Do you reckon the CPI can be cooked? I don't know if it's cooked. I doubt it. All right, so the president just tweeted again. He says, quote, and again, I'm not agreeing or disagreeing with anything he's saying. I'm just covering the news. The president tweeted and he says, quote, Canada cheated and got caught. They fraudulently took a big buy ad saying that Ronald Reagan did not like tariffs when actually he loved tariffs for our country and its national security. End quote. U.S. president. Yes, I'm sure the data's today. Government is shut down, but they brought workers back, furloughed. They brought furloughed workers back just to get them to release this data. So, yeah, we're getting it. We're getting the data today, 8:30. And for those wondering how it's going to be, for those wondering like how it's going to be whenever the government reopens, today's day 24 of the government shutdown. For those wondering how it's going to be, it's going to be like this, right? So they basically rescheduled CPI. It usually shows up on like the 12th or the 13th. It's now on the 24th. They release it on a Friday. They give you the time, they give you the expectations, and then they're just going to release it on that said day. This is going to be what it looks like when the government actually resumes data, but yeah. Some airlines are also issuing ground stops due to air traffic controller staffing shortages amid government shutdowns. Yeah, this is the 20th government shutdown. Second longest in history, the longest full shutdown in history as well. But again, inflation data, take a look at the graph that CPI has made here. Yeah, for August we did 2.9%. We are expected to jump up a little bit. I can, I said that. Again, guys, so CPI inflation data scheduled for 8:30. It's the biggest economic event of the month. It's the only official government data since the government shut down. 3.1% is an uptick for year-over-year inflation, though. Last time 2.9%, I think, is what we showed up as. And so let me check. Yeah, last time year-over-year 2.9%. Core was 3.1% last time. But yeah, a higher reading would underscore the impact of tariffs pushing up goods prices, challenging the dual mandate just before the next policy meeting on Wednesday next week. Important. Again, the government is now shut down 24 days, the longest full shutdown in history. Legislative deadlock is still unbroken. Again, if we take a look at Tesla, they had earnings here. They ended up filling the whole gap, and Tesla is now net green from earnings. High-level economic officials from the U.S. and China have convened in Malaysia for today through the 27th for trade talks aimed at de-escalating. And the U.S. is using the talks to kind of try to get China to back down from its recent export restrictions on rare earth minerals. The deadline for U.S. to implement the retaliatory 155% tariff and ban on critical software is November 1st, which would be next Saturday. Again, the crypto market is waiting for CPI as well here. You know, Bitcoin has been kind of wild. If you take a look at Bitcoin here. But it's back up to 111s, which is good. Again, earlier this month, Bitcoin had kind of like a flash crash. Bitcoin dropped to like 108s. Depends on which platform you look at. The ETH dropped down to 3,800. But they're holding steady. It might be sensitive to CPI though. Lower inflation could increase odds of easing and rate cuts, and that's what Bitcoin and crypto wants. Crude is up to over 60 a barrel still. Take a look at crude this morning. At $62 a barrel right now. Gold down to 4,070. Hit 4,050s earlier. Again, IBM up to 286s today. Both the tech stocks, here's an optimistic sign for earnings coming out next week, is that both of the major tech stocks outside of Netflix, Tesla and IBM, dropped and then recovered. Right, so Tesla dropped from their earnings and then filled the gap yesterday at the opening bell and held it. Tesla, if you look at it on the top middle chart, Tesla is sitting at 450s basically right now. The earnings came out, it was at 440. So Tesla's technically green from their earnings report. Technically. Same thing with IBM. IBM's not green, but it's about flat. IBM earnings came out, it was about 287. It's at 286. It basically filled the whole drop. It dropped down to 261. That's hopefully a resilient sign for some of these tech stocks, especially with big tech coming out next week with Apple, Amazon, Meta, Microsoft, and all that stuff. Up or down on the newsprint, I really don't know. Smart film. Yeah, do me a favor, hit that like button. Let's try to get over 100 likes quickly here. We got exactly an hour before CPI inflation prints. Big day. Gotta be careful. Tesla at 446s. And look at Bitcoin. I think we gotta watch Bitcoin too. Bitcoin at 111s. Yeah, Intel earnings yesterday. They went up nicely. They closed the bell at $38 at $41. So Intel up from their earnings. AMD up to 240s. Netflix still down though. Markets might be choppy leading in this earnings report too. We'll have to wait and see. Even more unpredictable with the way news is being released in the shutdown. Well, there's not news. I mean, there's news getting released, but there's not economic data coming out, right? And so, you know, and this data is late. CPI was supposed to show up. I think it was like around. CPI was supposed to show up on the 13th or 14th. I think on the 14th, Tuesday the 14th this month, October 14th. So we are 10 days late for CPI, and because we're not getting anything else, I think it's an interesting time because, you know, if we had weak labor and high inflation, well, you could probably say, okay, we could still cut rates. But we don't get labor right now. We're not getting labor data. You know, we're not getting jobs data. We don't get jobless claims. We don't get the labor report. We don't get payrolls. We don't get unemployment right now. And so because we don't get that stuff to see how weak or strong the jobs market is, the labor market is, all we're getting is inflation data. And so if inflation data is high, it's going to push back odds of rate cuts. I don't know how much. We'll have to wait and see. It depends on how much, you know, higher than expected it is, but it's a relevant report. Expected today 3.1%. Coming down a little bit too. You can watch the news live, and it's gonna be live. Mop. Yeah, you can. We're gonna cover the news live as soon as it happens. Yeah, 2,200 be crazy. Again, oil's pushing up. Gold is down. Bitcoin, look at Bitcoin drop. Oh. President says again. President just tweeted again, and he said, quote, he tweeted twice in the last 2 minutes. Ugh. Sorry, guys, I'm sneezing. Ugh. There's got to be something in here that makes me sneeze. Anyway, the president tweeted twice. He says, quote, the United States is wealthy, powerful, nationally secure again, and all because of tariffs. The most important case ever is in the U.S. Supreme Court. God bless America, he says, end quote. Sorry, I'm laughing at some of these comments. He also said, quote, the stock market is stronger than ever before because of tariffs. I mean, maybe. I don't know if it's because of tariffs. I don't think it's because of tariffs personally. Tariffs are, you know, I think it's mostly from AI, but, you know, listen, stock market's strong. He's not wrong there. Again, I'm not agreeing or disagreeing with any, you know, I'm just, stock market is strong. I don't know about the other one. Hey, thank you guys. Appreciate it. Top 3 sneezers in the world right now. Yeah, guys, listen. Inflation data, 55 minutes. We will stream the full report live. Today we have CPI expectation 3.1%, 0.4% for headline, 0.3% for core, I believe is what's expected today. I don't know, man. We'll see what we get for CPI. I'm ready for it. We'll see what we get. But $38 trillion of debt. Yeah, no. Listen, it's time. Again, the president said, quote, the United States is wealthy, powerful, and nationally secure again because of tariffs. The most important case ever is in the United States Supreme Court. Just be ready. Again, CPI inflation data. Ooh. We had earnings this morning as well, chat. We did have earnings today. We had specifically Procter & Gamble, General Dynamics, Booz Allen, Flagstar, HCA, Choice One Financial, Graph Tech, a bunch of small ones. Nothing really big, to be honest. It's Friday. We don't have a jobs report. So all we got to do is look at CPI inflation data. You just draw lines to trade or you follow a strategy? You know, I flip a coin, and if it's tails, I buy big size. If it's heads, I buy small size. And then I basically, you know, put a blindfold on and I scribble around on the charts. And then if the scribble looks like a bull, I buy. If it looks like a a bear, I sell. You know, that's basically, you know. 130, but needed that extra $20. Yeah, it's been a really good week, honestly. I've been making money this week. If you want to see my stats this week, like I trade based off of levels, though. I look at levels. I look at milestone levels, relevant levels that people are watching. It's been a good week. It really has. This is my main account, I think, and this is like the best. This is since the beginning of October, really. And then actual graph here. Honestly, we did pretty good. Like, look, we've had what, 2 losing days out of 1, 2, 3, 4, 5, 6, 7, 8. 2 out of 8, so 75%. My horoscope. It's hard to look. I'm not judging, but if you take the horoscope super seriously, maybe I don't understand it. I don't know. It just seems like telling people what they want to hear. Like, oh, you're kind. You love your family. You know, oh, wow, that's got to be me. You know, like, get out of here. Sit down. Anyways, again, rate cut odds. Yields are up. Let me look at our poll. We did a poll this morning. 44% think we're going to come in higher than expected for inflation data. 44%. 26% think lower than expected. 30% think as expected. I'd love to hire you to trade for my project. A free 15%. I'm good, man. Higher CPI good for crypto? No, it's the opposite. Crypto wants easing, right? Meaning like economic stimulus. They want quantitative easing. They want lower interest rates for crypto. And so if we get higher inflation, it's a roadblock to those lower interest rates, right? If we get high inflation, the Fed has less of a green light to cut rates, ease, economic stimulus, quantitative easing. We got less of a green light for all that stuff with the higher inflation is. You know, the Fed's job is to maintain a dual mandate, and the way they control things is through rates, right? So if the economy is really weak and it's looking like it's in trouble, examples of this are like 2008, 2020. If that stuff happens and it looks like we're like trending towards a recession, the Fed will step in. They'll bring interest rates down. You know, if it's a really desperate thing like 2020 or like 2008, they'll do something called quantitative easing, which is money printing, where they create online bank reserves and they use that to buy up a bunch of bonds and other financial assets like MBSs. This expands their balance sheet, injects liquidity into those markets, helps bring interest rates down and more. But the consequence of that easing is inflation. You know, so lowering rates can cause inflation, but quantitative easing can cause inflation spiking and snowballing much faster, if that makes sense, right? So they can't do it all the time. If not, they would, you know, just do it all the time. And so that's what it is. And that's if the labor market's weak, you know, and the logic of this is that when interest rates are lower, businesses expand more because they can take out cheaper loans and use that for business expansion. People take out more loans and buy things, and it stimulates the economy in that way. Right, businesses hire more people spend more, you know, businesses do better, and all the different stuff, you know, all the different ways you want to look at it. If inflation's a bigger risk, you know, if inflation's a bigger problem, then the Fed will kind of do the opposite. They will raise interest rates. Like 2020, we cut interest rates, we did quantitative easing. By 2022, inflation had spiked to almost 10%, and CPI was like 9.2%. When that happens, the Fed steps in and does kind of the opposite. I don't know what this song is. When that happens, the Fed steps in and does kind of the opposite thing, which is they raise rates. You know, like in 2022, they raised rates. From 2022, they raised rates like 400 or 500 basis points, and then they held them there for a year straight. They held them at what they consider restrictive levels. This does the opposite. It kind of pushes the economy down a little bit, pushes spending down, and helps lower inflation, you know. But if you keep rates too restrictive, like too up there for too long, we can enter recessions and stuff like that. So there's risk to both sides. The Fed's dual mandate that they talk about is they want low inflation and a strong labor market. And right now, honestly, we kind of have the opposite. Something that sometimes precedes a recession is called stagflation, which is an economic state in which we have high inflation and weak labor. And I think a lot of people would argue that's what we're in now. You know, we've had high inflation and weak labor, and so it's the worst of both. But the market's strong. You know, the stock market's been strong, close to highs. But there's risks, you know. Once you get to a certain point, though, the risk of weak labor becomes greater than the risk of inflation. Inflation's kind of a normal thing that we get. Like, inflation happens. You don't want it to happen too quickly, but inflation can be a sign of economic strength. And you know, after the labor market gets past a certain weakness point, it becomes the priority. Historically, you know. So. You answered my question. I think I just did, right? Yeah. Yeah, all good, Nas. All right, we're at 375. It's a good question. I mean, you had it backwards, but it's important for everybody here to understand like what this all means. You know? All right, guys, we got 45 minutes, a little bit over 45 minutes. Hey, man. Love you, bud. Good day, dude. Hey. All right. Yeah, gold's down today. You know, it depends. Inflation data might move gold. Inflation data certainly could move gold. I'm not saying it will, but it definitely could. Like move gold up or down. But we'll see. Yeah, Bitcoin down to 111s, but it's still up. I mean, Bitcoin was at 108s. You know, Bitcoin futures got down to 103s. So Bitcoin's up a little bit. See if it holds. I don't know. No, the camera's normal. Did my son come from the other side? Did they flip the camera? I don't know, man. No. It is flipped. Hey, it is flipped. Why? Hold on, let me see this. That's weird, dude. Okay, hold on. Let me... Properties. It did flip it. I'm looking at it in the background. It is the opposite. Strange, man. Like, this is so weird, dude. Not a new camera. It's the same old camera. I haven't changed cameras. That is very strange, though. Took it upon itself to flip it. Again, at this point, it's 93 to 3% likely that we cut rates next week on Wednesday. 93 to 3% likelihood that we cut rates. Hey, hi, John. No, man, this is the same me. I mean, you guys get to see the other side of my face here, I guess, but opposite day. Maybe it's OBS. Yield's still over 4%. All right, guys, we are so choppy. I don't know what to do here. I almost want to short this. It's so choppy, I kind of want to trade it. Or the stream, I'll short it. But we're chopping. Now, we get lower inflation, the market will probably push up. But the range is tiny right now, waiting for the CPI report. Tiny. Not big, it's tiny, tiny. Waiting for the CPI report. We got 45 minutes. Oh, wait, y'all don't even have the right account up. There it is. Since the range is small, I will take a little bit larger size. I want to see if this 375 level rejects it. Gonna add up there, but we didn't really get a chance to. Yeah, a lot of the time ahead of CPI data, market's really flat, really sideways, really choppy. Honestly, if we didn't have earnings, I think the market would have been choppier yesterday. Wanted more, I didn't really get it. All-time highs on the NASDAQ are 25,394. We actually hit that number earlier. Early this morning. This is the all-time highs on the NASDAQ right here. So we're very close to all-time highs. This is it right here. We are very close to all-time highs. Like we're right there. All right, I'm gonna add a little bit to this and just see if we can drop more. And again, just to kind of give you guys some understanding here, like we got a CPI inflation graph we could look at. Like here's the historical CPI inflation numbers, right? Oh, hold on, let me maybe take some profit in this. I'm gonna take one off here. We are very green trade. Got a nice breakdown exactly at the level we wanted it, and it's CPI day. I'm gonna just cut it right there. 375 rejection here. But yeah, here's a CPI inflation graph, right? And you got to understand, like, remember we talked about the Fed doing quantitative easing and stimulating the economy in 2020. This is when that occurred right here, and you can kind of see like the consequence of that easing was inflation, right? What happened to inflation? Inflation spiked. Here's 10% right here. You can kind of see this is like 9 point something percent at the peak. And then the Fed pivoted and started getting restrictive and started raising rates, right? And the consequence of that, and again, I've talked about this a lot of the time before, right? The consequence of that is inflation slowed. Inflation doesn't ever literally go down. And that's the big misconception that I see like most people in the general public have, because they're assuming when people say inflation's going down, they assume that prices are going down. And that's not true, right? Inflation doesn't literally decrease. Inflation decreases, but prices don't, I think is a better way to say it. Like inflation slows. The rise at which prices go up slows down. You know, like here is, what is this? This is 2.9% right here. 0.9% right there. Right, so this is 2.9%. So it slowed from almost 10% to 2.9%, which is what it showed up at last time. Today they're expecting 3.1%. But prices don't literally go down. Maybe right here. Outside of entering like deep recessions, like this is the 2008 financial crisis right here. So, and that's the only time, like here's the break-even line. That's the only time prices literally go down, is when we go into like deep economic issues. So I think people have this big misconception that prices are literally going to drop. And maybe in food they will, in gas they will. Food and energy are more volatile. That's why a lot of people look at core inflation and core CPI, because it excludes food and energy. So you might see food and energy prices decrease. But in terms of general prices, like what you're paying for things, you're really not going to see those drop almost ever. You know, very rarely do those literally go down. Depends on the sector. It genuinely depends. But yeah, that's kind of how you have to look at it. It's the bull run of 2021. 2021 was fun, bro. That was a fun time, man. I remember 21. Yeah. Lower inflation is still inflation. Like I said, I should say price. When I say prices don't actually decrease, usually inflation might decrease. Like the rate at which prices go up might decrease. Which again they did, Bring it back to it. You know, they decreased from 9.1% rise in prices annually to an average of 2.9% last time for August. Now, this next report is for September that we're getting today in about 40 minutes. Yeah. I would say making $100,000 a year is close to normal now. And again, I fear inflation more than anything else. I'm self-employed, right? So like what I make, I make. Now, it generally goes up over time. But I don't want prices to go up that much, you know? I don't have anybody to raise my salary, you know? And so I don't want prices to go up like that. But, you know, that's life. Yeah. John, you know you control the markets. It's my fault. It is my fault. Top 3 market controllers. Well, there's a poll that said Canada, speaking of Canada, is going to grow 1.2% this year and next. It was 1.3% in July. A little bit more, a little bit of a decrease in expectations there. CPI, people think are going to show higher headline and steady core rates. Import costs continue to lift goods inflation, slower shelter travel inflation to ease some pressure is what they're saying. We will see, man. All right, guys, we got about 1,000 people here already. Still got like 40 minutes left, about 35 minutes left. Data comes out. We will see. I'm ready for it. All-time highs today. It's very possible we hit all-time highs. If you look at the NASDAQ here, this is all-time highs in the NQ right now. This level right here, 3,000 or 25,394 is the all-time highs in the NASDAQ. The SPY for the S&P, if we take a look at that here, here's the SPY. SPY all-time highs, if we depends on where you look at it, but SPY all-time highs are 674s. We're at 672. So I mean, we're pretty close. Technically, the SPY's over all-time highs, but it's pre-market, so it doesn't really count. You got to wait until the opening bell to see. But yeah, the SPY around all-time highs as well. So. I have to redraw this, I think, but that's okay. The NASDAQ starting to fight its way higher here. Again, all-time highs. NASDAQ up to 383s, 384s. We might break all-time highs ahead of the CPI report. We're getting close to it. If we take a look at NVIDIA here, NVIDIA's back up over 180s, which is good. You know, you can look at like Apple. Apple's ripping up this morning, 260s. Intel up big from earnings. AMD up to 240s this morning. Beyond Meat down under $3. What a shock. Google at 257s. Netflix up a little bit on the day as well. Look at the NASDAQ push here. Buy push up. We're getting some movement. Procter & Gamble had earnings. A couple other earnings reports. Any chance for a deeper pullback this year? I mean, yeah, there's always a chance. Dipping gold shows me it's a pump. Go look at the 1 hour hitting support. Yeah, I mean, you're talking about what? This level? 75 right here. 80. 5. Maybe. Big pullback though. All right, guys, NASDAQ fighting higher. Again, here's the all-time high level. We're getting pretty freaking close to it. We did a poll. 44% think inflation is going to show up. Headline inflation year over year is going to show up higher than 3.1% today. Again, 44% out of over 600 votes. We will see. Do you guys agree? Let me know in chat. CPI continues to be strong. We might get 25.5 by next week. Yeah, for sure. Possible. It's possible we hit that today. It just, you know, we'd have to have a good print, a good reaction to inflation and stuff. Okay, so a top Russian envoy did arrive in the U.S. for official talks, according to CNN. The Kremlin envoy is expected to meet with U.S. officials. All right, somebody posted this, and it's a little bit too political for me, and I'm not really political, to be honest. But Rep. Jeff Van Drew spoke to the president on the phone a week ago to talk about a year-long ACA credit extension. The president asked him, quote, "Can't we do better?" He replied, "Mr. President, we don't have the time," end quote. Yeah, so maybe we're going to get a deal done. I hope we get a deal done. I'm hoping it's going to be, a lot of people think it's going to be by the end of next week. If we look at when the odds are here, we've been looking at the odds every day and kind of watching them change. If you look at the odds, look at this pullback here in markets. Powell has the odds for a government shutdown ending. 49% think it's now going to last over 45 days. 63% think it's going to last over 40 days. 39% think it's going to last over 50 days. So we are at the, you know, a long government shutdown, man. Yeah, we're definitely getting CPI today. We're definitely getting CPI inflation today. 8:30 Eastern Standard Time. Okay, we got 30 minutes. Hit the like button. I appreciate it. Thanks so much. Yeah, so that's Cauchy odds. Let's look at Poly Market. Poly Market, 8% of people think it's going to end on before the 30th. 11% think before October 31st. A majority of people think it's going to last longer than past November 16th on Poly Market. Yeah, look at the NASDAQ back down here. And markets are flat, pretty choppy here. Buy pulling back. Nvidia's up nicely on the day too. It's kind of helping drag things up. Gold is down. Bitcoin. Here's Bitcoin right here. Buy. Gold. Put this up. Just be careful right now. Market's very flat ahead of the CPI report. We get good things, we could break all-time highs. We get bad things, markets could dump down. We're very close to all-time highs. NASDAQ tested all-time highs earlier this morning at we're really at about 5:41 market time this morning. Tested all-time highs. Yeah, we got inflation data going live. 30 minutes, guys. Less than 30 minutes now. 27 minutes to be exact. CPI inflation data. Again, hit the like button next to the play button. Hit the subscribe button. We appreciate it. Thanks so much. Yeah, so again, the U.S. Bureau of Labor Statistics is going to report CPI today. The data's been delayed by over a week due to the U.S. government shutdown. We got a couple days before the FOMC decision. Market expects the Fed to cut rates at its next meeting unless there's a surprise in the CPI report. The data release could be particularly important. In the absence of labor data, markets are going to look more focused on CPI. So we'll have to see what this is getting here. Again, if you look at Trueflation, they have it at what? Look at the Trueflation graph here. Trueflation has, I think, inflation edging up here as well. Again, expectations 0.4% month over month for regular, 0.3% month over month for core, and 3.1% for both core and regular. Nasdaq's really getting choppy here 25 minutes before this report drops, or 20 minutes, really. Oh. About to say, man, my phone got the timer on. Yeah, again, Trueflation has it at 2.3% right now. You look at like a 6-month chart. 0.3% here. So they do have Trueflation has it rising. What if they announce the shutdown is over? I don't know. I think maybe we see like a buy the rumor, sell the news dynamic with gold specifically. I don't know what it's going to do to regular markets and indexes. I'm not sure. President pushing the data. No, that's not. So the president's not the one pushing this data out. It has to come out. Just to clarify. Right? What do I mean by it has to come out? They have to have it for Social Security analysis. It doesn't really have anything to do with the rate decision, according to them. It has to do with Social Security analysis. So essentially, they need to see what inflation looks like to see how much to raise or lower Social Security benefits for people. And so because of that, they brought back furloughed workers to compile this data for release today for specifically that reason, right? According to them. I'm not saying, they could obviously just be saying that, but yeah. And again, data is expected. I don't think, listen, president wants rate cuts, right? Like he's been pushing for rate cuts for a year plus now. He wants rate cuts. Look at the NASDAQ fight its way back up. It might get up here to test all-time highs. The president's been pushing for rate cuts for like a year plus now. If that's the case, honestly, inflation going up is not really the best sign for rate cuts. If we want a rate cut this week, next week, I don't know if just getting inflation data is what he would do. I think he'd probably show weak labor versus inflation. Because again, if we get a hot inflation print today, we don't really get any labor data to counteract that, if that makes sense, right? Like right now, in order to cut rates, we at least need really weak labor. If the higher inflation is, the less likely it is we cut rates, and the less green light we have to cut rates. Because what does cutting rates do? It might raise inflation more, stimulate the economy more, raise inflation. And so I don't know if releasing CPI, if you want rate cuts, is necessarily the right decision. Now, of course, it depends on the number. We get a super low print, it's going to become a lot more plausible for that to be the case, right? But we'll have to wait and see. We got 25 minutes left. How is the data being released if the government is still shut down? Because, again, I just said it. The data is being released even though the government shut down is because they specifically brought back some of the furloughed workers to compile and release this CPI inflation report. Because they need it for Social Security analysis. That is why they brought it back. You have to know how much inflation we got to raise or lower Social Security benefits. See how much you need to raise or lower because it's supposed to follow inflation, right? You get a similar thing in like real estate in terms of like landlords being to charge rent. Like landlords can increase rent at the rate of inflation annually. In a lot of places, at least, right? Same thing for Social Security. And so that's why they brought CPI back today specifically, is because they needed to know what it was to see, for Social Security stuff. Jobless claims data hasn't been coming out. It was supposed to come out yesterday. It didn't. We've been getting some of it from private sources, being compiled from private or state level sources is what we've been seeing. But it hasn't been coming out either. Yeah, I mean, inflation and weak employment does mean stagflation. I think a lot of people would argue that's where we're at now. We got weak labor, high inflation, stagflation environment, maybe preceding a recession. A lot of people are arguing. I don't know. Maybe. Kind of. Could be. Hey, what's up, Zig? Appreciate it, brother. Thank you, man. It doesn't always, somebody said inflation plus weak job market equals recession. It doesn't always mean it. It could. What's up, Chef? What is your CPI prediction? I think it's going to come in as expected at 3.1% or lower than expected at like 3%. Maybe. That's my guess. That's just a guess. Right? Again, as expected at 3.1% or slightly lower than expected at 3%. That's my guess. I might be wildly wrong. Not an investment professional. Don't copy me. I might be wildly wrong about anything and everything I say. Do not copy me. Again, not an investment professional. We're not liable if you lose money. Don't copy me. What's your predictions? Let me know in chat. What do you think CPI is going to show up as today? You can either put year over year. You can put month over month. What do you think CPI is going to show up as today? Let me know in chat. Don't know how often you get this, but thank you for your time. Hey, thanks. Appreciate it. Thanks so much. Yeah, it's a straight up guess. Yeah, I'm going to go with 3%, 2.9%. Or I'm going to go with 3.1 as expected of 3. What I think. Did you put a timer up? I'm not saying there's one in the bottom left corner. I'm not saying there is. 3.2, 3.3. So y'all think it's going to come in higher than expected? Same or higher? 3%? No, it's just, I got to mess with anybody. You'd be surprised at how often I get people, like, the time is at the bottom of the screen in big yellow letters. It's literally in the title of my stream, 8:30. But people are like, what, 8:30 Eastern time? But what time does CPI come out, bro? And then there'll be a timer. I got to mess with them. Got to use your context clues here, guys. All right. 2.7%. If it's 2.7%, we're going to cut rates next week. I think we're going to cut rates anyway. 0.95. 3.1% is pretty high. They should be increasing rates, not lowering. Unless they think that inflation was transitory. The transitory inflation might be a little bit more true now in the context of tariffs. Now it depends on what happens. We got to get a deal done before the 1st with China. If we don't, obviously we could have higher risks there. All right, guys, it's a big day. We got inflation data dropping live pretty soon. It depends. There's both. The CPI over year month it's both. YO year over year compares it to the same period last year, right? Relative to the same period last year. So like year over year means they compare it to the same period last year. Month over month does the same thing, you know. Yeah, it's going to be lagging. Most of the time CPI is lagging, but today it's a little bit more late. You know, today the inflation data is coming in. What is it? It was supposed to come out, I think, on the 14th. It was supposed to come out a week and a half ago. On the 14th, Tuesday, October 14th is when CPI was supposed to come out. We were also supposed to get, you know, generally we get CPI, which is the consumer price index. It's consumer inflation. And then we get producer price index, wholesale inflation, right? So we can kind of see what's going on like in that context for everything, and like you end up like seeing what's going on for everything going on in inflation. We're not getting PPI at all now. We're just getting CPI. It's a one-time economic report. At least it's something. But man, I'm excited to get it. I appreciate you guys tuning in for it. But I'm ready for this government shutdown to end for selfish reasons. You know, like my channel covers economic data. I haven't had as much to talk about. We don't get any economic data coming out. I mean, we still got a good amount of people that show up here, but bring back the economics. Like, I love trading, and I trade live every day, and we swing trade, and we do all this different stuff. I love economics more than all of it, though, to be honest. And so bring back the economic stuff. Can anyone explain how consumer price index will be released if the U.S. is shut down? Because they specifically brought them back to calculate it. They brought back the furloughed workers specifically to calculate it for Social Security reasons. And it is scheduled for today in about 17 minutes. Data comes out 15 to 17 minutes. Yeah, make economic reporting great again. That's right. You know, I appreciate it, guys. I'm nervous about the number. I think it's going to have more relevance, more weight today relative to normal just because of everything going on. It's going to have more weight. Yeah, we got 15 minutes. Chat, 15 minutes now. Again, hit the like button, hit the subscribe button. We appreciate it. Highly emotional, highly leveraged macro and micro market doesn't add up to anything positive in the medium-term future, I imagine. Yeah, I mean, the last time we got economic data, signs showed weak labor data, weak jobs market, weak jobs, and high inflation. You know, inflation creeping up. And so, yeah, I mean, I don't think that's an optimistic look. You know, we did start cutting rates. We did have more optimism for rate cuts the last few times the Fed spoke. Jerome Powell spoke, did meetings. JP Morgan announced yesterday that they think the Fed is going to end quantitative tightening next week. Again, it's not 100% sure. This is JP Morgan thinking that the Fed will end QT on Wednesday next week. Quantitative tightening is the opposite of QE, quantitative easing. QE is when the Fed prints money, buys up a bunch of bonds with the money they printed, and MBSs, and it expands their balance sheet, injecting liquidity and ultimately helping bring interest rates down fast. QT is the opposite of that. They don't directly sell off their bonds and MBSs. They instead let them mature, and it slowly reduces their balance sheet. This is called passive QT, is what they're doing. But again, they're expected to stop that, according to JP Morgan, next Wednesday during the Fed decision. So we will see what happens there. But that would be a dovish monetary policy if it happens. Hey, thank you, Kelly. I appreciate it. Thank you. You guys feeling emotional? Yeah. Yeah, I always discuss how I trade. I'm trading less today because the market is just doing this, right? And I mean, unless I'm going to short the top and buy the bottom, this doesn't really look like a good market to day trade, especially ahead of an economic report. You got to think about the psychology of it. With big inflation data coming out today, big CPI inflation data dropping soon. With that big CPI inflation data dropping soon, traders are less likely to take big positions. They're less likely to buy and sit. They're less likely to hold through it because of the volatility that can occur from CPI. And so the psychology of it is that most people are apprehensive and unwilling to trade big right now because of this report. And because of that, you know, you get this choppy kind of sideways market stuff right now. And again, here's all-time highs right here. All-time highs are right here. I will draw this again ahead of this report just so people can see it. Here's the SPY. Bad SPY drawing. Top 3 worst ever. Here's the SPY. Here's Bitcoin. Nasdaq's starting to fall. Draw another C. That's a bad C. Top 3 worst C's ever. All right. Here's Bitcoin. Here's gold. It won't have any effects on the markets. Rate cuts are coming. An AI bubble is running. It might dip a little bit, but at the end of the day, they're at new all-time highs. Maybe. I mean, you might be right. It depends on what the number is. If we get high inflation, like much higher than expected inflation, obviously, that's bad. Almost universally, nobody wants that. You know. So we get high inflation, that ain't good. That's bad. I'm not saying we're going to, but if we get it, that's not good. All right, so the Canada-U.S. trade talks stalling again. Talks between Washington and Ottawa hit a snag after President said he was ending negotiations, undermining recent progress. Markets have taken a setback in stride, focusing on U.S.-China talks and new Russia sanctions. Again, GM is cutting more than 200 jobs in response to business volatility. All right, the White House envoy Witkoff is expected to meet Russian counterpart on Saturday tomorrow, according to Axios. All right, Nasdaq's still falling down here. Again, we're expected at 3.1% for headline and core year over year. Yeah, previously we had it at month over month. Previously it was at 0.4%, so it's expected to stay the same. Again, core CPI is expected at 0.3% month over month. Last time core CPI month over month showed up at 0.3%. So they're kind of expected to stay the same. What was core previously? Like 2.9%. Gold is really flat and stagnant here. All right, guys, we got 10 minutes. So this report drops 10 minutes. Ooh, let's see what we get. It's time. Really about 9 minutes left. Make sure you hit the live button next to the play button. Put it in 2x speed, guys, to make sure you catch up to the stream. It's time. Again, give me your last minute predictions. 2.9%, 2.9%. Inflation comes in high. Does it mean the market crashes out? It could. It doesn't mean it necessarily will. And sometimes you don't really... sometimes it's really hard to gauge what happens here. Again, sometimes it's really hard to gauge what happens. But generally, higher is worse, lower is better. Again, generally. Generally. And for those that want to know for sure that is coming out today, BLS will publish the September 25 CPI inflation report, 8:30 Eastern Standard Time on Friday, October 24th. No other releases will be scheduled or produced until the resumption of regular services. This release allows the Social Security Administration to meet statutory deadlines necessary to ensure the accurate and timely payment of benefits, end quote. BLS, Bureau of Labor Statistics. I'm ready. I'm excited. 3%. I'm going. That's what I said. I said 3%, maybe 3.1% is what I think. I think as expected or slightly lower, maybe, but maybe that's confirmation bias. Like maybe I just want them to. I want lower inflation. We'll see. Again, Trueflation has it at about 2.3% if you look at it. Trueflation does have it at about 2.3%. But they don't have, we don't have as much to go by now that the government shut down. 3.5%. All right, guys, make sure you put it in 2x speed. Make sure you hit the live button next to the play button. You put it in 2x speed. And make sure you get caught up to the stream here for this report. If you put it in 2x speed and hit the live button, you'll get the data basically as soon as it comes out. 3.5%. 3.5% would be chaos, really. It would be chaos. All right, guys, NASDAQ's falling down ahead of this report. We have about 6.5 minutes left. About 6.5. 4.2, 2.9, 2.8, 3.2, 3.5. Yeah, Bitcoin wants lower rates. And so it wants lower inflation. Bitcoin wants easing economic stimulus. Less federal officers to collect data. Yeah. Again, that's what I'm saying. My guess at 3.1 or 3% is just a straight up freaking guess. I really don't know what we're going to get. Somehow I've been accurate a lot with these. But not every time, of course. All right, guys, here we go. We got about 5 minutes left. Yeah, the president did quote this morning. Ontario Premier Ford says Canada and the U.S. are friends, neighbors, and allies. President Reagan knew that we are stronger together. We did have the president speak this morning, or tweet, I should say. The president said, quote, U.S. is wealthy, powerful, and nationally secure again, all because of tariffs. The most important case ever is in the U.S. Supreme Court. He also said, the stock market is stronger than ever before because of tariffs, end quote. So again, not saying I agree or disagree. I'm just saying that's what he's saying this morning ahead of the CPI inflation report. 5 minutes left, chat. 5 minutes left. Timer's a little bit early, actually, but it's okay. 5 minutes. All right, guys, here we go. 5 minutes. About 4.5. I'm excited. We got economic data for the first time in a long time. Good. Maybe he knows this report is going to go bad. Maybe. Presidents generally have a very simple playbook that all of them use regardless of the side they're on. If the economy's weak, a lot of the time inflation's going down. And so if the economy's weak, they'll hyper focus on inflation. And they'll be like, look how much, work we're doing to inflation. We're helping inflation go down. You're welcome. Right? If the economy's strong and inflation's ripping up, they say, look how strong the economy and the GDP is and the labor market is. You're welcome. So that whatever side is weak, they just ignore that and they go to the opposite side. And again, it doesn't matter. I'm not even critiquing the president. This is all of them. Every politician does this for the most part. Once, that's how it goes. That's normal. You got to see it for what it is. And I can't even get mad. That's probably what I would do too. I'm gonna focus on what's strong. Yeah, it's been a long time since economic data. Gemini says 3.1. All right, guys, here we go. Let me get this ready. We are ready here for this report. Again, hit the live button, put it in 2x speed. Chat. You'll be caught up soon to the stream. Hit the live button, put it in 2x. We got 3 minutes. 3 minutes. Can this data be manipulated? I mean, of course it could be. 2.8%? Yeah, I'm going to go with 3 to 3.1. I don't know. I'm going to go with 3 to 3.1. My guess. 2.5 minutes here, chat. 4% would be crazy. I don't think so, though, but it could be. Again, expectations for both core and headline are 3.1. Core month over month expected at 0.3. Headline month over month expected at 0.4. Love to see sub 3. Yeah, I mean, I think 3 is a big milestone, like, level for inflation. I think 3 is a big level here. 3 is a big level. All right, guys. Let's do this here. We got less than 2 minutes. Less than 2 minutes. Hit the subscribe button. Hit the notification bell. We appreciate the love. Thanks so much. Less than 2 minutes. Nasdaq's ripping up. It's at 376 here. 376. All right, guys. 1 minute left, chat. We have 1 minute. We got 3,000 people here. Here we go. And again, we're going to read the full report as soon as it comes out. We're going to read the entire report as soon as it comes out. So stick by. This timer's a little bit early, so ignore it. Here we go. All right, guys. 30 seconds. 30 seconds. $20 seconds. Hit the live button, put it in 2x speed. You'll be caught up to the stream. Hit the live button, put it in 2x speed. We got about 15 seconds left. $10 seconds. Here we go, guys. You get 3.1% expected for both core and regular. Here we go. Here's the report right now. Oh, really? The SPY is flying up right now. Absolutely flying up. 3% for core and regular. 3% for both core and regular. 0.2% month over month for core. 0.3% month over month for regular. Again, 3% for both core and regular CPI. I got it right again. Somehow I got it right again. I don't know how I always get this right, dude. I've just got CPI's number. 3% for both core and regular. Core CPI month over month, 0.2%. Versus expected 0.3%. Regular CPI month over month, 3%. 3% versus expected 4%. Yeah, I got it right again, guys. I got it right again. CPI inflation data out. 0.2% month over month for core, 0.3% for regular. Let's take a look at the actual report, though, by the Bureau of Labor Statistics here. Again, it says the consumer price index for all urban consumers. NASDAQ flying up. I don't know how I always get this right. NASDAQ just broke all-time highs right now. All-time high break on the NASDAQ. We just broke all-time highs on the NQ. In the SPY, Bitcoin pushed up. Gold ripped up. Everything ripped up. Look at everything move on my charts here, guys. NASDAQ, all-time highs, 25,513. It said the consumer price index for all urban consumers increased 0.3% on a seasonally adjusted basis in September after rising 0.4% in August. The Bureau of Labor Statistics reported today over the last 12 months, the all items index increased 3% before seasonal adjustment. The index for gas rose 4.1% in September, was the largest factor in all item monthly increases. The index for energy rose 1.5% over the month. The food index increased 0.2%. And you can kind of see these numbers right here. Guys, NASDAQ, everything ripping up over all-time highs here. Shelter was at 3.6%. Services, less energy, 3.5. Core services, energy services, 6.4%. You can see the month over month reading. Shelter increased 0.2% month over month. Yeah, so very good data. I would say very good data, especially like the month over month data. And the NASDAQ, S&P, everything flying up right now, How did I get it right again, dude? Always get it right. I don't know how. If you don't tune into my stream enough, you know, you don't really understand what I'm saying, dude. I get this right certainly a majority of the time. I have the gift for CPI. It's only for CPI for some reason. I don't know why. But again, let's summarize. Let's summarize the CPI data for you guys. All right. And again, we'll post a little bit more. But again, 0.3%, or 3%, I mean, for core and regular CPI. 3% year over year. 0.3% month over month for headline CPI, lower than expected. 0.2% month over month for core, lower than expected. Every CPI print was lower than expected here. Kind of shocking. Kind of crazy. Yeah, the spike at the SPY was because of CPI. Again, CPI data did show up lower than expected everywhere. 3% year over year for both core and regular. And that's what I told you guys I thought it would be. I thought it would be slightly lower than expected. Again, CPI month over month, 0.3% versus 0.4%. 0.3% versus 0.4%. I love you. Good day. So everything showed up lower than expected today, basically. And there's a reason the NASDAQ, the S&P, the Dow ripped up on this report is because it all showed up lower than expected here. Lower than expected. NASDAQ at all-time highs right now. New all-time highs on the NQ are currently 522.75 or 523. Again, gold is up. SPY is up. NASDAQ is up. Bitcoin is up on this report. So everything's basically up right now. Yeah. Can you explain why you thought it would be lower? It was just a guess, to be honest. Somehow I guess it close to right most of the time, but I'm gonna take profits. Yeah, NASDAQ at all-time highs. First move is never the right move. Yeah, I mean, we got lower inflation. I think basically if you take a look at yields right now, you'll see why the market reacted favorably. I think they're not the most connected, but yields are down on this report. And it's understandable. So like yields and interest rates follow each other. So here's yields right now. Right, like here's yields. Yields are going to decrease on this report because lower inflation data opens more of a green door to cut rates, right? And yields and interest rates follow each other. And so yields are going to be falling down on this report at 3.965%. Again, headline CPI. Yeah, look at yields fall, 3.965%. Yields are steady going down. NASDAQ is up. And again, so this is essentially pricing in. Yeah, so again, CPI data came out. Again. Core CPI 0.2% is a good number, right? So core CPI excludes food and energy prices. It only rising 0.2% month over month is a pretty good number for all this stuff. Yeah, I mean, I think it's pretty certain we're going to get a 25 basis point cut next week. I think that's pretty likely at this point in time. You know, I see some people mad about this in chat. Like, I get it. But I think it's pretty likely we're going to get a 25 basis point cut next month. I mean, we still, this data is good and bad. It's lower than expected, but year over year inflation is still over 3%, or at or over 3%. I don't think 3% is good. I think 3% is bad, but it was lower than expected numbers. It was a slower rise than expected. I think that's more optimistic. I think that's why yields are going down. I don't know if inflation is slowing. I would say inflation is still rising. I mean, I think look, here's the easiest way to put this. Okay, here's a CPI inflation graph. Right, here's a CPI inflation graph. Let me get all these other things out the way. Here's a CPI inflation graph. The last time we got CPI, it was at, I think, let me pull up the actual site. Here's a CPI inflation graph. If you look at what this is right now, and this is by the Bureau of Labor Statistics. Last time CPI, today it showed up at 3%. Last time it showed up at 2.9%. Time before that it showed up at 2.7%. March it showed up, the CPI report for April showed up at 2.3%. March it was at 2.4%. Now it depends on the context. So to say whether inflation has increased or decreased, well, it's increased this year, mostly. You know, it's increased since March. But I would argue that's kind of isolating a really short-term time frame. I think when you look at the broader picture of things since 2022, inflation has slowed significantly. You know, now it's hard not to slow when you're almost at 10% after the super easing market of the 2020 period. It's hard to not slow from those peaks up there. You know what I mean? But if we zoom in here and we look at specifically where we were in April at 2.3% to where we are now in September at 3%, we're 0.7% up since April. So that's not necessarily good. That does show a rise in inflation. I think some of that's from tariffs, some of that's from all this different stuff. But yeah, we're certainly increasing since April. But if we're talking about longer term, we obviously down. Yeah, here, I'll put the actual numbers up. My bad. Here, I got you guys. Right, there's the numbers at the bottom of the screen. Nasdaq's holding here. It does look like a bull flag. It broke all-time highs as soon as CPI and inflation data came out. Yeah, again, sometimes the first move is the wrong move. No quantitative easing. Powell is too cautious. Yeah, I mean, I hope we don't do quantitative easing. I don't think we should do quantitative easing. I think quantitative easing is the absolute worst decision right now with inflation over 3% or at 3%. I just don't think we should do QE at all. I don't think we need to do QE. I think, like, we can print and like if things get really, really bad, sure. But we could just lower interest rates slowly is what I think we should do. We can end quantitative tightening, which is not the same thing as printing. You know, stopping the reduction of the Fed's balance sheet is not the same thing as expanding the Fed's balance sheet, you know? So, like, I think we can end quantitative tightening. I think we can lower interest rates a little bit, like 25 basis points, which, again, I told you guys last Fed meeting, I think we're going to do 25, 25, 25. Like, I think that's what we're going to do, 25, 25, 25. Now, we'll see what we get for this. But, yeah, CPI inflation data did come out. How could gold go up on this news be the wrong move initially? The reality of it is, because this is all short-term expectations. This is all short-term. So we don't know what we're going to get long-term. anything can happen short term. Gold might go up, down, sideways. We could have, you know, gold's been volatile, especially. I don't know what my headset is, man. It doesn't matter. Market is up 50% from April. Yeah, if you isolate the very bottom of the tariff-driven crash, sure, you know. Oh, 25%. Yeah, I don't know. I'd have to even look. I don't even know where the market was. Let's take a look. Here's the QQQ. At the bottom of the QQQ, during the April slump, it hit 402s. Yeah, that's about 50%. April lows were at 400s, about $400. We're at 600s now, roughly. $200 is what percentage of 400? 50%. Now, a little bit misleading, but, you know, it's not necessarily wrong. It depends on which market you're looking at. The Nasdaq's more tech influenced. So I just looked at the QQQ. If we look at the SPY and do the same thing, SPY hit lows of about 480. We're at 680s now, so yeah, not quite 50%. Gold's up, but it's down still net on the day. So if you look at gold here, gold's on the bottom right chart. Previous closing price in gold, meaning the level at which it closed yesterday, was at 41.43. So gold's up from this report, but still net down. People are so emotional, is what I hear. I get it. You know, I might be emotional too. I don't freaking. Yeah, Tesla ended up going down from earnings. It's now all the way back up. It's still red on the day today, though, but it's still net green from relative to where it put earnings out. Is it time to buy the dip here? Let's end this poll. 44% of people were wrong. Does the NQ pull back now that CPI is out, or does it continue up to continue breaking highs? Pulls back, breaks highs, and then we'll put something else. Comment. All right, vote on the poll. The market pull back or continue breaking highs right now, chat? Let me know. We got 45 minutes until the market opened. We are going to day trade live at the opening bell today. Don't get it wrong. We are going to day trade high at the opening bell. We'll see what we get. But, yeah, we are going to break highs today at the opening. We are going to day trade live at the opening bell, so stick around. All right, guys. So today, again, CPI showed up at 3% for both core and regular. Headline CPI, 3%. Month over month, core showed up at 0.2%, lower than expected and lower than last time. Headline month over month showed up at 0.3, or at headline month over month showed up at 0.3% versus the expected 0.4% and lower than last time as well. So most things showed up lower than expected for CPI, and markets have reacted favorably. NASDAQ broke all-time highs. The previous all-time high in the NASDAQ was 25,394, roughly. We are now up to 25,005 plus for all-time highs. So NASDAQ's pushing up. Everything's ripping up here. Again, I'm going to reiterate this again. Today we had CPI inflation data release. All of it showed up lower than expected, lower than last time for the most part here. Again, this includes CPI month over month showed up at 0.3 versus 0.4% expected. Last time was 0.4%. Year over year headline showed up at 3% versus expected 3.1%, previous of 2.9%. Core CPI month over month showed up at 0.2% versus expected 0.3 and a previous of 0.3. Core CPI year over year showed up at 3% versus 3.1% expected and a previous of 3.1%. So all of it was either as expected, lower than expected for CPI inflation data. Markets have broken all-time highs, and we'll see if that continues. Inflation at 3% is the highest since January. Let me see. Yeah. That's right. That's correct. Last time CPI was at 3% was January, right? February was 2.8. March was 2.4. April was 2.3. May was 2.4. June 2.7. July was 2.7. August was 2.9%, and then today was 3%. So yeah, that's correct. Why isn't Bitcoin pumping on this news? Well, because Bitcoin, it's up a little bit on this news, and so I mean it's up. CPI showed up what? Here. It's up a few $100s since then. So Bitcoin's up. Not up crazy, but it's up. Beginner trading, so is a lower CPI better? Yes. Almost universally, lower CPI is better. How is everything green with red CPI? Because lower CPI is better, Rand. Low CPI means lower prices. People don't want higher prices. Now, CPI is technically the rate at which it grows here. You know, so like it means slower. A better way to say it is it's slower prices. It's slower price increases. Slower inflation. And yeah, the market wants that. It's again, when CPI is red, it means low. That's good. To an extent, that's good. You explain the macro of markets being up with bad CPI. Again, CPI. Listen, I cover all these reports. I've covered them for years. CPI is better when it's lower than expected. And CPI today, just to put this into perspective, for month over month specifically, showed up lower than last time and lower than expected. For month over month specific. Right? So month over month specifics here. Core CPI showed up at 0.2%. Last time it came in at 0.3% and it was expected at 0.3%. Today it showed up lower at 0.2%. That's good. Headline month over month showed up at 0.3%. Last time it showed up at 0.4% and they were expecting it to show up at 0.4% again today. That's good. Now year over year, a little bit different. It upticked 0.1% versus 3.1% expected and 2.9% last time. And but core CPI, which excludes food and energy volatility, which is volatile prices, was lower than last time at 3%, as well as lower than expected at 3.1%. So most of it was lower or better than expected. That is why the NASDAQ reacted positively. That's why Bitcoin reacted positively. That's why yields went down on this report, is because it was lower than last time and lower than expected. How is BYND? I mean, it's down. It's down, what, 50, 65% relative to highs? I mean, it's a penny stock that got pumped up. The macros of it are terrible, and it's just not really a good company overall. So it's, maybe it goes back up. I don't know. I'm not buying it. What do you think about gold? I mean, I think we got a slightly optimistic report, but the government's still shut down. We got the Fed meeting next week. It depends on what the Fed does next week regarding gold. That people think, oh, lower CPI so the Fed won't cut. No, that's actually opposite world. So lower CPI opens the green door to rate cuts more. One of the roadblocks to cutting rates is high inflation. And so higher inflation will make it less likely that the Federal Reserve cuts interest rates, because cutting rates and bringing rates down might make people spend more and might make businesses expand more and more leverage and more loans, and that might make prices go up. And so we need price stability before the Federal Reserve can do that aggressively, because if not, it might exacerbate the problem of inflation. Cutting rates specifically is what I mean, might exacerbate the problem of inflation. And so in order for the Federal Reserve to get more of a green light to cut rates, they need low inflation, not higher inflation, just to clarify. Yeah, we're going to stream the Fed meeting as well, for sure. 93. We're going to stream. You think the market will be bullish at the opening bell? Yeah, I asked people this morning. We did a poll here already. We asked people, does the market pull back now that CPI is out, or does it continue breaking highs? 49%, almost half of you guys out of 500 votes already said it continues breaking highs today. 47% says it pulls back. 4% said something else. So you think the S&P will also rise today? I'm not sure. It's already risen from CPI. What it does now is different. I think the CPI did was optimistic, but what we're seeing now, honestly, with rates, and I think it's pretty likely we're going to cut interest rates again next meeting, next week. I think it's pretty likely, yeah, and if you look at the odds now, yields are down. Rate cut odds for next meeting are now 99 to 1%. They were 97% this morning. Now they're 99% likely that we're going to cut rates. So it's pretty freaking likely that we cut rates. Again, 99 to 1 now, likely that we cut rates. Are yields fighting back up? Let me take a look. I mean, yields can kind of sometimes be by the rumor. They were over 4% this morning, though, so they're still kind of net down from the CPI report. But yeah, they're still down from this. Take a look. Here's today. Right here's 8:30 right here. So they're still down. They might be going up a little bit, but it's very probable we cut interest rates now. Look, y'all don't ask me. I'm talking about abilities here. And again, people are asking, hey, why should we cut rates? Because rate cuts, number one, we have lower inflation data than expected, and month over month we had it lower than the previous. All right, so if we look at month over month, it was lower than last time, lower than expected, or for month over month inflation data. That opens the Federal Reserve's door to cut rates It was already likely. I think even if we had higher inflation than expected today, I think the Fed's going to cut rates. Again, you have to understand, we've seen incredible weakness in the labor market. Incredible weakness in the labor market. We also are right in the midst of a government shutdown, so we don't get the labor data that we need to guide the Fed, right? And so, like logically here, you have to think about what the Federal Reserve is going to do. And again, most likely what they're going to do, and I've said this after the last Fed meeting, I said this before the CPI report, I've said this before all of it, what they're likely going to do here is the Federal Reserve is likely going to do 25, 25, 25. They're going to cut last meeting, which they did. They're going to cut next meeting, which they probably are going to, and then they're going to cut again in December. So I think they're going to do 3 cuts for 2025. I think it's going to be 25, 25, 25, probably. Again, probably. It's never 100% though, and I'm not an investment professional. I'm not liable if you lose money. Again, check out Top Step if you want to help support the channel. There's no PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, currencies in some places. Very similar to day trading stocks when most day traders lose money. And honestly, just a beautiful way to learn how to day trade. Most day traders lose is $50 a month for the base. When you pass the test, you get a 50K funded account, 90% split. You fail, you lose $50. Lets you limit your risk, and most day traders lose, and so it lets you limit your risk. They're a sponsor of mine. I'm biased. Here's the link if you want to check it out. I'll also pin it to the top of the page. Yeah, I think people are just emotional, man. Like, look, I get it, you guys. I think a lot of it's come politicized, right? So if one side says, hey, we shouldn't cut rates, and the other side said, hey, we should cut rates, you know, people just kind of root for it like it's their football team. I'm fearful of inflation. I'm not saying I want the Federal Reserve to cut rates, guys. You know, I'm not saying I want the Federal Reserve to cut rates. I'll put it this way. Why do you think the market reacted positively to the CPI report? Y'all are getting mad at me for the market reacting in a specific way. It's not like I'm controlling the market here. Like, the market's the market. It's what most people believe. That's the psychology of the market. NASDAQ, S&P, Dow broke all-time highs on the CPI report. Why do you think that is? Probably because easing probably coming in the future. Y'all are acting like I want the Federal Reserve to cut rates 1,000 basis points here. You know, sit down. Stop being emotional, guys. It'll be okay. Cheers to you guys. I appreciate the love. If anything, I told you what the CPI report would. I told you around what I thought the CPI report would show up as. I said 3.1 or 3%. Half of the chat room voted it would be higher than expected. I'm not gonna say you're welcome, but you're welcome. Yeah. And again, what I will say is that if you're taking massive positions ahead of CPI, y'all go sit down, man. Like, you shouldn't be gambling on a freaking CPI report before it comes out. You know, trying to guess what the CPI report comes out. Only I can do that. I'm not gambling, though. Yeah, you're gambling on a red folder event. I'm not going to say it's your fault, but it's definitely your fault. Anyways, let's see if the NASDAQ bounces. We're kind of slowing down in price. Who's getting mad? Oh, there's a bunch of people that are like, what are you talking about, bro? You know, like, listen, I'm just telling you what's probably going to happen. I'm not saying I want it to happen. I told you back in the last Fed meeting, I thought we were going to do 25, 25, 25. Now that's the most probable case. 25, 25, 25. We don't have labor. The thing is, like, we don't have labor data to change the tune. So if it's already likely that we're going to cut rates 25 basis points next meeting, we don't have any labor data to change that outlook. You know, all we have is this inflation report, and the inflation report was mostly lower than expected. And so that opens the green door to more rate cuts. That confirms most likely, considering we're so close to the next Fed meeting, next Wednesday is when the next Fed meeting is, considering how close we are to that Fed meeting, the base case is now pretty likely, which is a 25 basis point cut next meeting. Not rocket science. We have more economic data at 10 o'clock today, do we? Oh, we got services PMI today, don't we? We got Michigan data as well. Yeah, we'll cover that too. Y'all stick around. People want doom and gloom. Honestly, I kind of want doom and gloom. My views are better when there's doom and gloom here. You know? Like, I get better views when the economy's on fire. You know? I kind of want doom and gloom, but that's not really what I see on this report. And again, the market apparently interpreted it the same way. So. Hey, what's up? Love from India. Hey, thanks so much. Love from Houston, Texas. I appreciate you guys. All right, thank you. Appreciate it. If you have no data on jobs and inflation got worse, why do you think a rate cut is more imminent? Yeah, but again, you got to understand, I would argue month over month has more influence than year over year. They're comparing it to last year. Last year was a different time. You got to put the context of inflation into it. People are mostly talking about month over month, which is probably the more influential one because it's the most real-time look. Right, and month over month, people like to isolate, like, it's all confirmation bias. Markets are all confirmation bias, right? But people like to isolate what they want to be the truth. And the reality of it is somewhere in the middle, right? If you look at the month over month inflation, both of them were lower than last time and lower than expected, okay? That's a good thing. That's a good thing. Now, year over year was lower than expected, slightly higher than last time. Sure, 100%. The overarching like reinforcer here is going to be, it wasn't crazy high and it wasn't crazy low. It was mostly as expected. It was mostly what it was last time, regardless of which one you isolate. It wasn't wildly higher or wildly lower. It was mostly as expected. It was mostly what it was last time, which does give more of a green light for the Federal Reserve to do what's already the base case, which is cut rates 25 basis point next week. Now, maybe we don't. But I think that is the reason the market reacted so favorably to this, is because the market wants rate cuts next week, and it was mostly what it was. Mostly what it was. You know, now we could try to act like this is some crazy high inflation print to sensationalize things because people are butthurt. They lost money or they are wrong about predictions or whatever it is. I don't freaking know. But that's the reality of it, you know. And again, I fear inflation. I'm self-employed. I don't want prices to go up, you know. I would rather prices not go up. Of course, but again, it looks like we're gonna move up to test highs. Gold's moving up to 4,100. SPY at 676. Bitcoin's starting to get a little bit higher here. You don't trade CPI, is what I would say. Oh, do not start with that, bro. I got an 11-year-old son. The 6'7" stuff. Don't even start with that, bro. I got an 11-year-old son. That's all I hear all day. 6'7". Yeah. Get off my lawn, okay? Yeah, the Fed's going to cut next week. They might end quantitative tightening next week. According to JP Morgan, they think we are going to end QT. I don't know. But according to JP Morgan, they think we are. Yeah, Jay Powell is Unc, not Uncle. You know. He's not my uncle, but you can give him Unc status. Alright, guys. We got 23 minutes until the market opens. Let's see what we get today. I'm excited. We got markets. CPI might be at the bottom of the screen. He's someone's uncle, yeah. Yeah. All right, the 10-year yields fall below 4% on cooler than expected September inflation report. Yeah, AI is getting out of control. It's getting really good, unfortunately. Fortunately and unfortunately in some ways. Gold up to over 41.20 right now for gold. All right, guys, we got 20 minutes left. We'll see what the opening bell brings. Ugh. John Connor's mad. Yeah, maybe, man. He probably is. They're all mad. They're all looking down on us. John Connor is. Will Smith from the AI movie is, for sure. You know, John Connor's mom is. You know, Arnold is probably looking down on us too. You know, Arnold might be looking up at us, but depends on which Arnold. T1 or T2 Arnold. All right, guys, we're at 25 475s. Again, guys, at 10 o'clock we do have, at 9:45 we have services PMI coming out. Yeah, and again, if you want to know why the market reacted favorably, it's because we got lower than expected prints for both month-over-month readings, core and headline CPI month-over-month. Year-over-year is relevant, but month-over-month is more real-time look at it, and so that's usually going to have a little bit more sway, and those were both lower than previously, as well as lower than expected here. Services PMI, I don't know how much it's going to affect the charts. I mean, we don't really have that much data to go off of. White House is now saying inflation data won't be released next month. Are they really? Yeah, what it really does, it depends on the source you're looking at. Like, I'm looking at different sources. Some, like, look, the easiest way to put it, I look at yields, right? I look at yields. Yields are lower on these reports, right? Like, that's the easiest way. Like, look what the market's pricing in. Yields are lower on this report. 3.983%. Here's where the report came out. Here's where yields are now. Yields are lower from this, right? But the source depends. Like, again, people like to go with their story. And so if they think inflation's, if they think we shouldn't cut rates, they're going to try to really hyper-focus You know, and again, it's gotten really political. I'm not really political about any of it. I think you could probably argue a 25 basis point cut next week. But there's risks, of course. And I think the labor market's showing deep signs of inflation. Fed probably going to cut rates. Fed's probably going to cut rates next week. I don't know for sure. Anything could happen. Yeah, I mean, we're heading into the U.S.-China fear week is next week. We got the Fed meeting. Next week's honestly crazy big because we've got Apple, Meta, Microsoft, Google earnings, and more. On top of that, the China deadline to 155% tariff increases is on Friday. So, and we got the Fed decision. We got the Fed meeting, we got big tech earnings, and we got the deadline for China tariffs at the end of next week. So we honestly got a whole bunch of stuff going on that might influence things. A lot of stuff that might change things. You just want to be careful. We have services PMI data today. Services PMI. Services PMI is the Purchasing Managers Index. This is strength or weakness in that sector. Generally, like with most of them, above 50 means an expansion in that sector. In this case, services sector. Below 50 means a contraction in that sector. It's expected today at 53.5. So they are expecting services to, service sector to be stronger. Or they're at least expecting it to be expanding some. We also have manufacturing PMI. Both of them are expected to be lower than last time, though. And then at 10 a.m. we have the Michigan Consumer Sentiment and Inflation Expectation Report and new home sales. So we got some stuff dropping today for sure. It's Friday. We'll see what it looks like, but stuff comes out today. Yeah, it's 99% likely that we cut rates next week at this point in time. Now, that's always subject to change. I don't know what might change it, though. I don't know if we're going to really see anything that's going to change this. And so I think a 99% likelihood, rate cut expectations next week is pretty probable at this point in time. I think it's pretty likely we're going to cut rates. Yeah, I think we're going to get 2 more this year. I think we're going to do 25, 25, 25. And I've said that for a while. I think that's probably going to happen. And it's funny, like, people get mad at me they say one person said I was bragging. And it's really funny because I am bragging, I like to take this time to apologize to nobody because I was bragging. Because I've gotten at least, I would say, 70 to 80% of the CPI reports pretty close to right. I'm not going to say completely right because I usually give out 2 different numbers, either this or this. But the direction of CPI, whether it's higher or lower than expected, I've gotten right a large majority of the time somehow. And I'm proud of that. I don't know how I'm doing it. I'm honestly just guessing. But cheers to me here because I'll take it. Top 3 greatest CPI predictor ever right now. And you love to see it. You just love to see it. Will the market react good or bad to a rate cut next week? That's the question I have now. Maybe I should do a poll on that. Yeah, I'll do a poll. All right, guys. The next poll is, if we cut rates next week, does the market react positively or negatively? Yeah. We had a pre-market pop. Will probably trickle down for the rest of the day, but don't go with what I say. Not a market professional. I like it. I like it. I read that meme, or I read that comment like this. You know, this was me when I read that comment. All right, guys, BYND back up. S&P, NASDAQ mostly holding these gains. Bitcoin's sideways. Gold is moving up a lot. It's up to 41.31s here. Almost green on the day for gold. It's still technically red. Beard is doing good. Honestly, I've had a bum leg here. And so I'm using this bum leg as a reason to just let the beard grow. You know, that's what's going on right now. What a question, Waylo. Definitely aged cheddar. As much as I hate to admit it, there was a period of time where my wife would buy like stinky, knobby cheese, and we'd eat it. You know, so there was like a 6-month period where we got really into cheese, and we'd buy like, we probably spent way too much money on it. It was good, but we haven't been eating cheese lately, not as much. All right, so looking at the poll number, 75% of people think we're gonna have a bull reaction if the Fed cuts rates next week. Will markets sell the news? I think there's a chance it does. I think it depends on what the Fed says. I think it depends on if the Fed ends quantitative tightening next week, like JP Morgan predicts. But I'm not really 100% sure. Yeah, my wife likes the grocery store. I'm not a big fan of the grocery store. I just hate the grocery store. Boring. You know, you walk around it, you look at stuff, it just, you know. Not what I'd choose to do with my time. You guys think gold will respect 1 hour? Come down to retracement? Maybe. Alright, chat, we got 10 minutes until the market opens. 10 minutes. We're gonna day trade. We haven't really been trading yet. Honestly, we ripped up here, but then we're just kind of sideways. All-time highs on the NASDAQ are now at 25,524. 25,524. All-time highs on the NQ. Depends on which grocery store. Some details. Yeah, I like going to grocery stores in other countries. That's cool. Yeah. My camera is backwards today. If you notice, it's backwards. I don't know why, but it is backwards. When will the government resume? Chat, let me know. Let me see if this. Let me see if the CPI data influenced the government news here. Let me see. So, according to Kaushi, 82% of people agree with me that think we're gonna get 25, 25, 25. They think we're gonna get 3 cuts. Per the CPI reading, we're now at the longest potential shutdown in history and longest shutdown odds so far. 45 days is what the new prediction is. That would be roughly 21 days from now. That'd be another 3 weeks. All a distraction, man. Again, when do you guys think the government will stay resumed? Or when do you guys think the government shutdown will end? Government will resume. All right. Oof. All right, guys. Ooh. All right, guys. Hats off. It's time to be serious. The opening bell is 6 minutes away. I don't miss it being open. Yeah, I'm a little selfish. It's fine. Close government until December 14th. Dude, I would hate that. Better not stay shut down that long. Stock market is serious business. That's right. Do you even lift? Not right now, I don't, dude. I've been trying to figure out how to work out while my leg's been hurt. Yesterday would make it 3 weeks since I tore my MCL. They got me in a cast. They did unlock it though. I could only move my leg 60 degrees. Now I can. They say I can do full range of motion, but the brace I have, which is called a, I can't remember what it called. It's a brace. It's a big brace. It goes all the way up my leg. They unlock full range of motion, but I've been trying to figure out how to work out. They say I should use a stationary bicycle, but point is, right now I definitely don't even lift, bro. I wish I could. I'm definitely skipping leg day too, you know, at least one leg for sure. All right, gold's pulling back a little bit. Nasdaq's at 485s right now. Bitcoin at 111s. Buy at 677, 76. Yeah, Intel reacted really well to earnings. Kind of shocking here. Serious business, no more joking in chat. Yeah, listen, be serious. Be open. Squat 650. Those are small numbers, bro. You know, I can squat 700 with my left knee right now, which is a hurt one. I just don't want to make y'all look bad, you know. Bro, how do you tear both ACLs and your right MCL and meniscus? You're making me feel better about my injury, brother. Mine was just my right that's that partial tear in my MCL. Linebacker. Makes sense. Dude fell out of a tree. Yeah. I'm wondering how you do that. Alright, guys. 4 minutes. Jiu-jitsu is how I tore my MCL. BJJ. Top 3 worst blue belt ever. That's how I feel right now, Pod. That really is how I feel right now. Alright, guys, here we go. We're dipping a little bit into the opening bell today. Sometimes the first move is the wrong move, and sometimes we react negatively at the opening bell after pushing up from inflation data, especially. And a trend that we've seen is we've seen the market start to correct a little bit at the opening bell from moves it made in pre-market when we have economic data. So maybe we'll see a drop at the open, or maybe we'll push up to break all-time highs. I guess I'm bullish, but I have no idea what we're gonna do. No idea. Barring my son, no. My son could probably beat me up right now. He's pretty good at jiu-jitsu as well, but no. All right, we're at 470s right now, 471s. buffet. Yeah, Krav Maga can be useful, but it's not. Kind of obvious stuff, you know, like, oh, poke him in the eye. Duh, you know, you poke him in the eye. You don't need to go to class to learn how to. Never mind. I'm not gonna be too, you know. I'm biased. Top 3 most biased ever. All right, guys. Nasdaq's coming back down. We're at 467s. As long as it's not a keto, you're okay. You know, Krav can be useful. We're down to 468s. All right, guys, 1 minute. 1 minute. I mean, I don't think we're dumping. We're just dropping. Not a huge drop. Opening bell's almost here. We got 50 seconds left until the opening bell. I'm gonna short the open and buyback after 30 minutes, subject to change, of course. Yeah. Bro, I could beat Steven Seagal right now with my bum knee. All right, guys, here's the opening bell. Good luck. We're going to try to trade this. We'll try to trade this. All right, we're now dropping a little bit at the opening bell. Let's watch other stuff, though. All right, there's a retracement back up. Nvidia dropped at the open. Tesla is up a little bit, actually, from the open. But Nvidia's falling down. All right, Nvidia's back up some. Yeah, I mean, we definitely got a little bit of a sell-off so far, but it's not anything. Whoa, look at Tesla, guys. Look at Tesla here. It went up and then it retraced all the way back down. White House economic advisor Hassett says inflation is deaccelerating, which helps take pressure off the Fed. He says U.S. president is frustrated with Canada, but is expected to talk with them again by the end of term. Oh, now look at Tesla come back down here. Wow, interesting. Netflix as well. Amazon's pushing up. Netflix is down. Tesla is down. Nvidia is up a little bit. Yeah, it could be sell the news, right? Like, I really don't know. It is Friday, though, guys, so y'all just be careful today. We are going to trade, but I'm going to wait at least a couple minutes to trade. Netflix is starting to bounce. Let's watch this 200 exponential at like 425 or 420 over here. Amazon looks like it's going to break highs. Nvidia is actually pumping up right now, too. If you look at Nvidia here. Gotta wait a little bit. Alright, guys, we're flat since the opening bell. Let's see if we get some movement here. Nvidia just pushed up to 184.50s. Netflix is bouncing back a little bit here. Tesla's kind of wild this morning. I don't know what Tesla's moving. Intel is at 7.8% up on the day. Up to 41s. Nasdaq now green since the open. Nvidia's pushing up. I might buy a little pullback here if we can get it. Small pullback. I'll look for it. That's a small enough one. We'll add a little bit more. We're already green on this account on the day, so we can play with it a little bit, but gonna add a little bit more here. Problem is Intel's there we go. All right, we're gonna take a little bit off here. Nice. A little bit more. Nice. There we go. Nice. I'm gonna cut it right there. Nice little micro pullback. See what else we get. Look at Nvidia though, guys. Nvidia at 185s. Yeah, AMD. Netflix rebounding too. AMD's up to 250 almost here. Wow. AMD. 49s. Yeah, I mean, we're so close to all-time highs, right? So I think obviously there's bullish momentum with a little bit higher edge than bearish. In S&P and NASDAQ close to record highs here. Somebody explain me this quote. Hassett said a timeout is the right call when you're frustrated. Did he really say that? Talking about Canada and US. Is he talking about Canada-US relations? All right, guys, we're very close to all-time highs. I'll buy another pullback here, a small one. We did buy. It's a different account here. Let me figure out which account. There we go. Okay. I'm going to go ahead and cut this. Look, there's the all-time high test. I'm going to cut it right up there at the top. Again, attacking the easy bullish momentum we're getting. Yeah, there's all-time high break in the NASDAQ. NASDAQ just broke all-time highs. We're up to 25,524s. All right, NASDAQ testing all-time highs. Nvidia at 185.60s. AMD almost at 250, hit 250.20s already here. Oh yeah, guys, I'm sorry. I completely forgot today. We have services PMI. Completely forgot. Got 9:45 data. Completely forgot. We got manufacturing PMI today and services PMI at 9:45. That is in 6 minutes here. All right, so we went up over the all-time highs, and now we're pulling back a little bit here. So I'm just, again, I'm kind of waiting. I wanted to take, like, you guys remember me, like, my strategy here when we're close to all-time highs. Like, as we get closer up there, what you see is, like, I started buying around these levels here. Right? Like, I'm looking to test the high. I don't want to buy a high of the day break, because that's like a rookie strategy, I think, a lot of the time. Where rookies are trying to buy high of the day breaks and attack it. And this is all-time high, so it might be a little bit more edge buying, that type of thing. But the reality of it is, I would much rather attack the range leading to the big milestone level versus the milestone level itself, if that makes sense. Right? So I would much rather attack this range leading to the big all-time high level versus buying this type of thing. You know, why? Because I think this edge right here is a much more powerful edge. I think once we get over a certain point, it's much more probable that we're at the very least going to test that all-time high, milestone, high of the day level, whichever one it is, versus the probabilities of us breaking it and continuing up in a big way. A lot of the time, people start taking profit up here. You know, they're like, hey, we're at all-time highs. Now's the time to sell. And so what I'm looking for, again, like I always try to explain this to people, is I look for this type of range here. It's like once we get over this point, it becomes likely we're going to test it. We might test it and then dump. You know, either one of those things could happen. But I'm just looking for the highest percentage edge, and I think the highest percentage edge is the range up to the level, not necessarily the big break and not necessarily a big breakout afterwards. And I think this is what a lot of new traders get wrong. New traders are like, they know high of the day breakouts and low of the day shorts, and they short it at lows of the days, and they sell and they buy it at highs of the days. And I think a lot of the time you're just going to get dumped on doing that. You're just going to get rejected heavily at those levels, because that's where that's the top of the range. Experienced traders take profit. Where do you see that the White House claimed there's no inflation next month? No inflation data next month. I should probably clarify. Gold now pulling back here. All right, guys, in 3 minutes. 3 minutes, we have manufacturing and services PMI. Where did they say that, Jeremy? Bloomberg? Okay. Gotcha. Where's Bitcoin at despite all this? Bitcoin under 111s. Bitcoin futures at least. All right, guys, we got about a minute until this data comes out for manufacturing and services. So, see what we get. All right, guys. So again, we've tested all-time highs. Now we're pulling back here. We got 15 seconds. Let's see what this report shows up as. Again, manufacturing expected at 51.9. Services expected at 53.5. It drops basically right now. Hit the live button next to the play button. Put it in 2x speed. You'll catch up. Let's see what this data shows. Manufacturing PMI for October showed up at 52.2, higher than expected and higher than last time. So stronger manufacturing than expected and stronger than last time. 55.2 for services, so higher than expected and higher than last time. So manufacturing and services sectors showed more strength than previously and more strength than last time. This actually just pushed markets up a little bit. Again, this just pushed markets up a little bit. You're welcome. We cover this as soon as it drops. Subscribe, hit the notification bell. We appreciate it. But again, manufacturing and services PMI both showed stronger than expected and stronger than last time reports just now. 52.2 specifically for manufacturing and 55.2 specifically for services. Those are both higher than expected and higher than the previous readings. So again, NASDAQ originally reacted favorably to this and now it's pushing down a little bit. But yeah, we got the Michigan Consumer Sentiment Inflation Expectation Report at 10 a.m. today too. And I'll put this data up on screen. There's global manufacturing data. And then here is and then here's global services data. So we're testing highs again. The new highs are now up here though at 550. Intel now breaking down, giving back some of the gains it made. It's back down under 40s now for Intel. It is flushing down here. IBM's up to 293s. Still struggling here though. All right, guys, so we got CPI inflation data out. It showed, again, it depends on which political spectrum side you're on here, to be honest. I think the left wants higher inflation, the right wants lower inflation. And just to kind of confirm the arguments that they have, and again, it's all gotten really political. I'm very neutral politically. What I will say is that CPI month over month, which is usually a more real-time look, and it's probably a little bit more closely watched, is we're both lower than expected and lower than the previous readings. Year-over-year readings were flat to slightly higher at 0.1%. And I think you have to kind of analyze all of them. If we look at all of these different reports here, like all of the different ones, right? If you look at all the different reports, 3 out of 4 of them were lower as expected. 1 of them was higher than expected. The headline year-over-year was higher than expected. Everything else was lower than expected or as expected. And so you can make your argument for whether it's good or bad in that context, but that's the reality of the numbers. And so that's what it is. And the market reacted positively to this report. We're now breaking down here. Some of this is Intel. I also think AMD's dipping down, Tesla's down. Google's really up on the day, so Google's very strong. We do have consumer sentiment data at 10 a.m. I don't think they want higher inflation. I just think it depends on what story you're going off of, just to clarify. Like, I don't think the left wants higher inflation necessarily. I think I would argue the left fears inflation more, which can be a valid argument. I think we should fear inflation, you know. But I think you could also probably argue small rate cuts. As long as you don't do full QE money printing, you know, economic stimulus type stuff, then I think we're okay. But, you know, there's risks to both sides, really, if you're looking at it objectively. Yeah, we got home sale numbers too. Got 2 questions. How is your knee? My knee's good, bro. It's the top 3. It's definitely one of my top 3 knees ever right now. But that's not hard to do. All right, we're breaking down. We're at 470s. All right, guys, NASDAQ starting to come back down here. We're at 470s. Fed target inflation is 3% below where we are now. So yeah, Matt, you're wrong. The target inflation is actually 2%, you know? But again, you said 3% is below where we are now. Where are we now? Talk about it. If 3% is under where we currently are, where are we currently? Question. I try to be politically neutral. I really am. I am politically neutral. I dislike all of it. I don't like politics as a whole. I cover it because it's relevant to what I'm talking about, but I don't like it. People get so wrapped up in it. I think it depends on what they got going on, you know. But yeah, it's all good. All right, let's see if the market rebounds back up. My prediction for the rest of October, 64 to 63.50. Oh, you're saying, my bad. I misinterpreted your question. I thought you said the target inflation is 2%. We're 33. Yeah, and again, I understand that for sure. We're definitely above target for inflation. But you have to look at the target kind of like the Fed's dual mandate. Yeah, the Fed wants low inflation and a super strong labor market. But that's kind of like, I want $1 billion and no taxes. You know what I mean? Like, it's the best of both worlds. Like, anything under 3% is generally considered good for inflation, just to understand the context of it, right? Anything under 3% is generally considered good historically. Above 3% is kind of the line where people are like, it's starting to get a little sketchy. And so where we're at now, 3% is the high end of normal, I would say. 2% is great. It's very difficult to achieve, but it's you know, unless we're in like a recession or something like that. But I can respect the 2% target, you know. My job is to make $1 billion. My target for me personally is $1 billion net worth, you know. But if I hit 500 million, you know, I'll be okay with that. And so I think you got to understand the context. Sure, the target's 2%. Kind of hard to achieve though. All right, guys, we got 6 minutes. All right, guys, wait in 5 minutes. You think we're gonna have strong correction for the Nasdaq 100 today? Maybe. It's Friday. I think the more likely outcome is that we're gonna chop, but we do have a lot of stuff going on. So we're close to all-time highs. CPI inflation data came out, you know, and so nobody really knows what we're gonna do. Hassett says no evidence that tariffs are causing inflation. Barclay says U.S. sanction on Russian could put Brent above $85 a barrel. Baker Hughes reports early signs indicate another year of low activity and reduced spending next year. Projects slight drop in worldwide upstream spending. The inflation number's already out, Jeremy. Read the bottom of the screen, brother. White House Executive Advisor Hassett says talks with Canada are not going well. Yeah, we already saw that. Yeah, well, tariffs cause inflation for sure. Generally, the tariffs that people pay, the levies are going to get passed on to consumers. That's how it goes. So yeah, 100% tariffs cause inflation. And you could argue we've seen inflation rise since April or May or March or whatever, and we have for sure. The question is, what's the bigger risk, inflation or the labor market? And what do you guys think? What's the bigger risk, inflation or the labor market? I don't know. I think the labor market can push us into a recession, and then at that point in time, we have to super ease and do money printing and quantitative easing, and that's going to make inflation get worse. And so it's better to do proactive small rate cuts without easing, without printing. That's what I think is the best move, you know, because I think if we get pushed into a recession because of too restrictive environment, we're gonna have to print, get us out of it, and gonna just be more problems for inflation, bigger problems for inflation personally. But I think it's somewhat subjective at this point in time. I think you could argue either side pretty reasonably. All right, guys, Nasdaq's pushing back up here. All right, guys, we got about 3 minutes here, about 3 minutes. Do me a favor, hit the subscribe button. We need like 100 subscribers to break 167,000. We're very close. All right, guys, we got Michigan consumer sentiment data dropping in about 2.5 minutes. Expectations for consumer sentiment are 55. We get White House advisor Hassett, and he said the shutdown could drop GDP by 0.1% each week. The president is currently frustrated with Canada. Two minutes. Yields are back over 4%, by the way. Okay, so yields are back over 4%. Still down relative to when the inflation data came out, though, but back over 4. All right, guys, here we go. We got a 1 minute left until the Michigan consumer sentiment data is out. Again, it's expected at 3.7% for 5-year inflation expectations, 4.6% for 1 year. Consumer sentiment is expected at 55 even, 55.1 last time. We also have new home sales expected at 710. Morning 710 for new home sales. Again, here we go. We got 30 seconds. Hit the live button next to the play button. Make sure you're caught up to the stream here. All right, guys, about 10 seconds left. Let's see if this does anything to the NASDAQ here, but we're close to all-time highs on the NASDAQ. Again, we're creeping up. Here we go. Let's see what the report shows. And here's the report. It just showed up. Michigan data is not coming out. Weird. I feel like most people aren't getting this. Strange. Yeah, for me, it didn't show up, and honestly, the site's down. Like, look, here's the University of Michigan data. All right, University of Michigan, where you at? Okay, there it goes. It showed up at 55 versus 55.1. Took long enough. Yeah, it's basically unchanged. Year ahead, inflation's 4.7%. We moved markets a little bit, but didn't really move it that much, to be honest, but it's out. New home sales, did they come out yet? I think it's lagging a little bit on my end. What did, was new home sales government data? Anybody see the new home sales data? From on my end, it's not showing up. Let me see. Yeah, Michigan consumer sentiment. I'm showing 53.6 actually. 53.6 for Michigan consumer. I don't see new home sales data, and I'm curious if new home sales data is government. I think it's at. Let me see. Yeah, 53.6. So consumer sentiment is actually lower than expected. Weird. It shows up really late on my end. New home sales. I don't know if it's coming out. I don't see any report of new home sales. I think new home sales might be government data, so it might be delayed. With the government shutdown is what I'm thinking here. Oh, dude, I just bit my leg, dude. We're close to highs. I might buy a dip here. Let's see. We did buy a dip here. This one? Yeah, look at that. Been really easy to make money today. I'll let this one test highs if we need to. Again, this is on Top Steps funded account program. They give you a 50K demo. They test your skill with it. If you pass the test, they fund you 50K, 90% split. You fail, you lose 50 bucks. The best of both worlds. 90% split, similar to funding your own account. 50 bucks is much less than you would lose funding your own account most of the time. Most day traders lose. And so it's a great way to learn how to day trade with limited risk. I'll put the link up right here if you want to check it out. Yeah, it was forecast at 710, but that's not what it showed up as. Forecast is what it was expected at. And so I don't think new home sales data comes out today, to be honest. I think it's government data. All right, we're pushing up here. I could add to this position too. We're up about 40 ticks, 50 ticks now. I want to see if we make this move up to test high, so I will add to this position here. We have 2 contracts now. There we go. There we go. Like half off right there. I'm going to add to this retracement here. I'm back in with 2. We got a pretty big cushion on the day, so I can maybe add. Oh, goodness. What's that? Big sell coming in. I'm going to cut that. We're still green on the day, but not as much. Switch it to this one. Big sell quickly. Got a very big liquidity grab. Was Nvidia candle? Look at the Nvidia candle that happened right there. Bounced right here, this 184 level though, so that's good. Interesting price action here today though. I want to see if we go up there and test highs again. It looks like we're going to, but it's never certain. Yeah, I don't think new home sales are coming out today. Michigan sentiment data, unfortunately. I think new home sales is government. Let me make sure. So we did jump in here. Okay. I want to see if we break highs, but it's close up there. There we go. There we go. Get up there. We're already green. Could double down on this and add more to it too, but I'll try. Try to hold it break even though. Go. Try to give it time to creep back up there though. Take it a little time. Alright, I'm gonna take half off there, lock it in. Yeah, government data on new home sales is delayed. It's by the U.S. Census Bureau, so it's not coming out today, unfortunately. Existing home sales is by NAR, so it's different. We're gonna hold the rest of this close to break even. I'd love for it not to fall though, so I can test highs right here. We're very close to highs of the day. So close. It's looking too heavy. I'm gonna cut that right there. It might continue pushing up, but we're very green on that trade too. It's been a good week for me. Again, here's the entire month of October in my main account. So this is the entire month of October here. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We've only had 3 losing days out of 13 trading October. So it's been pretty good. Look, here's a different one. This is a completely different account, separate account from this. This one we've done even better. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days. We've lost 2 out of 9. So almost 80% accuracy in this one. Here's the other account we've traded. We got 4 accounts. So here's the other one for October. We've only traded it 3 times in this. All right. Green nonetheless. No losing days. And then in the first account we have, we're mostly flat here for October. So the last account, we're down a little bit, but it's not a huge losing day. No. Not too bad. We're green in like 3 different funded accounts today. I don't think we've lost money in any of them. Yeah, today we're up hundreds of dollars, which is good. Yeah, these are all funded accounts. I don't think I can even open up any funded accounts. I have 6 technically. I have 4 activated and then 2 on standby. So. Yeah, so we finally got inflation data, chat. Finally got inflation data. Again, we'll see what we get now. Who knows? But again, y'all be careful. Be safe today. Remember, it's Friday. A lot of stuff can happen. Again, check out Top Step if you want to help support the channel. There's no PDT rule in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. Most day traders lose money. And so, a great way to learn how to day trade when most day traders lose. Check out Top Step. You can now reset funded accounts as well. If you end up losing it, you can reset it, and same rules as the previous funded account. So it's a great way to learn, and it's some of the most reliable payouts in the game. I'll put the link up. Y'all be safe. They're a sponsor of mine. I'm biased. I get paid by them. I understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. I'm not liable if you lose money. And yeah. I'll be safe. Again, as soon as we close this stream, it should bring you to the next week. I'll go ahead and schedule that stream. But yeah, as soon as we close this stream, it'll bring you to Monday's stream. Oh, wait. I just scheduled this the wrong date. I did October 25th. That's Saturday tomorrow. NASDAQ's very close to all-time highs, though. Yeah, NASDAQ's getting very close to all-time highs. Yeah, I'll see you guys over there. Y'all be good. Hey, I love you all. Y'all have a great day. I'll see you guys next week. Be safe this week.